Welcome to the Crypto Pulsar channel. Let's take a look at Bitcoin's latest Bitcoin market structure. On the daily chart, a large bullish candle surged more than $6,000 from the bottom. After approaching the $70,000 level, it printed a long upper wick and pulled back. Is this strong rally a return of the bull market or just a rebound before another drop? From a fundamental perspective, the miner shutdown price is an important bottom fishing indicator. The mining cost for small mining companies is around $77,000. The cost for large mining companies is around $50,000. When the price falls below the cost line of large mining companies, triggering shutdowns and Bitcoin sell-offs, that becomes a key node for mid to long-term spot DCA and phased position building. Next, we will continue to track the live market trend from the perspectives of candlesticks and historical patterns. From the Bitcoin weekly candlestick view, although there is currently a technical rebound and the price has recovered to around 67,933, the bearish structure of 5 consecutive months of declines on the monthly level has not changed. The MACD histogram is still negative despite shrinking, and the RSI has rebounded from the lows to 48.54. The RSI has not yet broken above the 50 bull-bear boundary, indicating limited rebound strength. This is a correction during a downtrend rather than a trend reversal. Combining monthly patterns, historically only 2018-2019 saw a rebound in the 7th month after 6 consecutive months of declines. The current 6th month is highly likely to approach a stage bottom. If the market later drops to the key monthly support level, it will be a core timing for mid to long-term positioning. If the short-term rebound fails to break the upper resistance, there is still downside risk after a false breakout is confirmed. Spot investors need to remain patient. The Bitcoin daily chart shows the current price at 67,905.43 with slight pullback of 0.23% in a consolidation and repair phase after the previous large bullish rebound. On the technical indicators, the MACD green histogram continues to shrink, and the two lines are turning upward at low levels, releasing a short-term stabilization signal. The RSI has fallen back to 48.89, losing the 50 bull-bear boundary, confirming that the rebound strength is relatively weak. Based on the previous judgment, the daily level rebound does not indicate a return of the bull market. We still need to be cautious of the risk of a false breakout. In the short term, the key level to watch is the $66,000 support. If this level is lost, the downward trend will likely resume. If the RSI can hold above the 50 boundary during a rebound, it may test the upper edge of the range. However, overall, it still belongs to a correction within a downtrend. Short-term operations should mainly focus on selling the highs, and spot investors should wait for key support levels before deploying positions. Bitcoin on the daily level is still in a weak rebound phase after 5 consecutive months of declines. The current price is fluctuating around 67,957 with a short-term pullback of 0.28%. Technically, the MACD green histogram continues to shrink, and the two lines are turning upward at low levels, signaling short-term stabilization. The RSI has rebounded to 47.98, approaching the 50 bull-bear boundary, but not yet standing firmly above it, indicating that bullish strength is still insufficient. Combined with previous analysis, the current rebound is not a return of the bull market, but more like a correction within a downtrend. In the short term, focus on the $66,000 support level. If it is lost, the downward move may restart. If the RSI can hold above 50, it may attempt to test the upper edge of the range, but overall operations should still prioritize shorting at higher levels, and spot investors should wait for key support levels before building positions.